Fred Atwater here. This is it's a long way to the top if you want to rock and roll. All right, let's turn that down. So rock and roll, kind of the theme here, because what I'm about to show you is rolling options, and I've talked about this in the last few videos. And it's been about a month since I made a video, and this is an active trade. It's real money. It's Raytheon stock is the underlier, and we've been in the options market on it since about April or May, I think, is when we put on the trade. And it's been doing very, very well. Let me click this off of here, show you a book recommendation here. It's called Reminiscences of a Stock Operator. It's an old book. It's a reflection on Mr. Livermore back in the 1920s, 1930s, trading. Very, very good book on psychology, and it's a book about the more things change, the more they stay the same. Okay, today we have a lot of technology, a lot of capability to trade, a lot of power, a lot of software, computers, that kind of thing, but the mindset of how to trade and how to trade successfully hasn't changed. It actually hasn't changed in thousands of years, but the technology has. Good read. All right, I'll show you what that other stuff is here in a second. So right in front of you here is Raytheon, and very quick review points here. Let me get the draw tool up here. Let's get some, red or something like that. How about that? Draw. Let's see. Yep, there we go. And let's clear that off of there. Clear it off. So what we did here, if you guys remember, the entry back here is listed back at 150. We went in. Look at that. There's a Morningstar reversal right there, but it actually didn't break. We still went long on the Morningstar reversal, and it ended up succeeding right there. This is a daily chart right here, and the stock has cruised on up here. I'm sorry, this is a weekly chart. And the stock has cruised on up here very, very nicely. I want to show you something here, which I don't know if I showed on the last video here. I've written this up here, Fibonacci 1272 target, and it's technically at $190.68, but I put an alert in here at 190. We are getting close. The high here was 184.17 on the trade, and this is a 1272 target is a very natural progression, sort of an inflection point in the market where it's going to decide to pull back or it's going to press and break higher. So that's kind of what I'm thinking on this particular stock. One way to do it is to go to the 1272 target and then take off half your position, and then raise your stop on the remaining half of the position, which is actually a more refined way than I was thinking about a few weeks ago on this. So I think my intention here is take half off at 1272 target and then raise my stop up, which is basically a reduce, you're reducing your risk. I can't lose on this trade at that point. I did something cool on this trade here. Oh, actually, sorry, before I jump to showing you something cool, I'm going to show you something else cool. It's called Bollinger Bands, and real briefly, here's what let me get rid of the draw tool. Bollinger Bands, you can go here and look on Wikipedia. You can read in about 100 different sources what Bollinger Bands are. The real quick, dirty explanation of it is standard deviations. It's a measurement, and it puts it on the graph here. Let me show you what a Bollinger Band is. As long as a stock is trading within those standard deviation bands, we can typically consider that it's flowing right. Once it starts breaking outside of Bollinger Bands, you're outside of that standard deviation, and you can change your parameters to your individual style. If it breaks outside of those Bollinger Bands, you might see some opposite direction in the trade. So here I'm going to click Bollinger Bands, and if you look at this is really neat. The Bollinger Bands here are, the stock is actually trading right within this red line right here. You can see that there. It peaked above it actually 2 weeks ago, and look what happened. It just kind of pulled itself back in like one might expect for the stock to do. Let's take a look real quick at the daily chart and see how the daily chart on this baby is flowing. Yeah, look at the Bollinger Band on this one. It's flowing and it's doing its thing. It kind of came up, retracted down, did its thing here, came back down, bounced. It's staying on the positive side of that, and it's finding support. This kind of turquoise line is the 20-day simple moving average. Seems to be finding support generally around that. All right, let me show you the risk graph real quick. We added to this trade. So one of the things you do when you have a successful trade, and I'm getting better at this, by the way, is one, you raise your stop so that you don't lose on the trade, and then two, trade's going in the right direction, push, add to it. It's called an add and reduce. You're reducing the risk by raising that stop, and you're adding to the trade because it's going in the proper direction. And what did I do on this one? I added a little bit. I added what's called naked puts to the position, and this is what I did. Naked puts are a more bullish stance than are my underlying leap call diagonal that I have on it. So basically I paired the two together, and the thing continued to go up. And what did it result in last month? It resulted in more profit. So let me show you the profit. It's actually the risk analysis graph, but it shows P&L on the trade. Let's go to analyze. RTN's already in here. I already did the numbers, did everything for you. Let me point out for those that aren't familiar with what this setup does here. Let's see. How about we'll just stick with green. That's fine. So this line here has brought is my max profit line, and max profit right now stands up right about, it looks like $7,000 this month if this trade keeps going in the right direction. That's $7,000 over the course of the 4 months or so that I've had this trade on. It might be 5 without counting public math here. This space in between here is theta decay on my current naked puts and my current short calls that are sold against my leaps that I purchased. All right, all of this space down here is to date profit. So boom, right at the intersection of that purple line, okay, the trade is up $5,500 in that time. That's very nice, very healthy, very risk mitigated way to approach trading. I love this stuff. Let me show you something here as well. Without the naked puts sold on here, let me just click those off of here. Oops, let me get rid of the draw tool. If I click off of those, notice what it does to the line here. It bends it, makes a little bit of bend in the line, but the more naked puts I sell against the position, the higher the profit goes, and the flatter this line, this turquoise lines, ends up being. The reason that is because of this magic thing called delta. Okay, so when I sell naked puts, I add positive delta to my position. All right, a put in and of itself is a negative delta, but when I sell short put, this is very complicated. If you don't follow, that's okay. But because I'm shorting, which is a minus sign, and a put is a minus sign delta, the two negatives become a positive, and I add delta to the trade, which actually makes it more profitable. Well, thanks guys. We're coming up on 9 minutes here. I think I hit all the high points that I wanted to on this. It's Saturday morning here. This trade continues to profit. Market's not open right now. It'll reopen. Defense industry strong. Our friends over in North Korea keep the world a-mixin', and defense contracts are strong under a Republican president. All right, you guys have a great weekend, great month, and I was going to end on the AC/DC song if I have the time to pull it up here. Long way to the top if you want rock and roll. There it is. Boom. We only got a few seconds left here, and let's continue. And you guys have a great time. 3, 2, 1.